Kevin here, top 100 financial advisor and best-selling author, and we are here to talk about the stock market. This is going to be that coming to Jesus moment. This could be the financial therapy moment, your moment of zen. Call it whatever it is you need to call it, but this is one of the videos if you want to save and replay when the market isn't doing what you expected it to do. So with the exception of today, we've had a lot of pretty bad days in the market in a row, and a lot of people, not everybody, but a lot of people are feeling a little skittish. They feel that I've made the wrong decision, I'm panicking, I'm anxious, I feel like I'm not doing this right. What do I do? Do I have the right stocks? Is this the time for me to sell and do something different? And you get a lot of these anxious thoughts and feelings about the market. I get it, okay, but I want to give you some tips and some things that can help you to manage in this moment in time. So the first thing is I already got a lot of stuff to tell you, but I always like to bring up the C word, and the C word is context. It is always important to look at your portfolio and what is going on right now, always in context. Context is one of the most important things, because when you understand context, it really puts your performance in perspective. It puts where you are and what you're investing in into its proper place. So remember that based on what's going out there in the world, whether it's COVID or interest rates or inflation or stuff in China, all of those things can affect your investment. And it doesn't necessarily mean that you yourself are a bad investor, or even if you chose the wrong company. That might not actually be your fault. You can sit down and say, look, I think that Nike or Target or Lululemon, I'm just naming companies out there, Amazon even, I picked a good company, the research that I did was right. Maybe you're looking at a chart and maybe your analysis was 100% correct. However, the market just shifted, or COVID numbers are not what we expect them to be, or people aren't being vaccinated the way we expected to be. Perhaps things aren't opening and people aren't traveling the way that you expected them to, even though everything at the time that you had made that decision was spot on, and it should have been spot on, and it would have been had things not changed. That doesn't make you a bad investor. Okay, that doesn't mean necessarily that you chose the wrong company or that the company itself is bad. Sometimes it just takes time. Sometimes it just takes time. So remember that context, that again, you might have the right company. I talked about this with Domino's, right? Last year, I bought Domino's in June. I held it through December. It wasn't all that great. A year later, right, if I held it from June 2020 to June 2021, the stock was up double digits. Hey, I was right, but I was not patient enough in that case. So it's always about having that context and giving yourself some time. If you've invested for the last 6 weeks or the last month, you might not see anything, and that's actually okay. That's actually pretty normal. But remember, we always talk about buy low, sell high. Well, when the market is low, like it could be tomorrow, like it was earlier this week, that's fine, right? It should be fine. You should continue to dollar cost average. It's one of those reasons why I say that. And I have another point that links to that as well. But just remember, like, this is a long-term thing. This is a strategy that you should have. If you have a plan, right, you don't necessarily have to be worried and concerned about the market dropping if it is dropping for you. We all own different things. Some stocks can be fine, others may not be. For example, I got into a trade for PayPal, right? I got in at 288. Last I checked, PayPal was not at 288. I'm going to check what it is now. But unless PayPal drops at 275, I'm not getting out. Is it doing what I wanted to do right now? No. Did I expected it to hit that price level within 2 weeks? No. So it was like a 6 to 8 week thing, and I'm going to stick with the plan. I'm just going to check it real quick to see what it was. PayPal is at 282. So I've lost close to $5 per share. However, the plan is I will wait until it gets to that, I think it was 325 when I was trying to exit, or 275 on the low end. That is the plan, right? And I'm going to stick with that plan. And until then, I don't need to panic or worry or question myself as an investor or anything. That's the plan, right? The same thing with my strategy about checking in on my investments every 6 months. The market is going to do whatever it's going to do, right? I've talked and I've said this over and over again about Nike, about T-Mobile. T-Mobile's Adobe is another good example. If you've been watching for the channel for a while, I'm like, man, I gotta get rid of Adobe. It's not doing what it's supposed to do. I'm not feeling great about it, but I'm going to stick with the plan. We saw when I sold Nike in June, it just so happened that it was up 14% by the time I was ready to sell it. And that was just the strategy. So you need to have a strategy, you need to have a plan, and you need to stick with it. You don't always need to second guess yourself after 2 weeks or after a bad day. Okay. Now the other thing is when we talk about context, I always think you want to zoom out and say, okay, well, what's going on in the market? What's going on in the economy? Was it really me, or is it just COVID? And that's affecting everybody, right? It might not be you. It could be the economy or just a general market trend. We know going all the way back to 1896. Okay, it's a long time. Going all the way back to 1896, since the founding of the Dow Jones, the 30 largest companies, like the original index. When we go back to there, we know that the stock market, the best, if we were to cut the year almost in half, we know that, I think it's, what is it, October? No, it's from November to April. From November to April every year, that is the strongest half of the year for the market, which leaves, what is that, May through October. Those tend to be like the rocky time. So May, which I actually did a video, posted that video on public, from May to October, it's not all that great. And that's fine, right? The market still grows, it just doesn't grow, and this is historically not every single year, but it grows, but not at the same pace. So if I know that, right, that's just a part of the game, right? But it's also, again, if we're trying to buy low, sell high, which is what people tell us to do, which is what's the most common way to make money in the market, is I can sit here and continuously DCA, put in my money monthly, put in my money weekly, whatever it is, follow my process, follow my plan, and say, look, I know that X company isn't doing all that great right now, but I do think it's a good company. I don't think it's going bankrupt. I'm reading the news, I understand what's going on, but the market is just, it's always like this, almost every year, on average, between May and October. It's just, right? It's just how it is. So I'm going to continue just picking up shares low, and maybe they're doing well but not extraordinarily well, but I'm picking these up now, and then come November, December, October, January, wow, I just did all those months out of order. I'm leaving it in, I'm not editing that out. But November, December, January, February, and the process goes on, then I, in theory, based on what we know, that's when the market really starts to get back at it and really takes off. But it really benefits me though if I got it somewhere, and this is just general averages, right? So if I were able to pick it up every month at low prices from May and all the way through October, and really kind of picked up everything relatively cheap, and I know the market historically kind of takes off from November on, that's a winning game. That's a winning strategy to me, right? So it could make sense to just relax and let things play out and give that some time, which is why I be telling y'all, right? Which is why when I'm doing my longer term trades, not my like swing trading kind of stuff, where I say, look, 6 months makes sense, right? If I know that's not going to be all that great from May to October or whenever, then picking some up in June might be the right time. And looking at it, not necessarily selling, but looking at it in December, might be the right time for me to do that. And that's, again, when you have that context, you're more confident. You have that context, you're more confident. And when you're confident, you can say, look, I don't have to worry about it. I honestly couldn't tell you how bad the market was the last week and a half, because it don't matter to me. I was buying anyway, which is what I tell y'all, right? So just remember to calm down, to relax. It is okay from time to time, and just know that you need to have a plan. If you don't have a plan, you need to go get one. Okay, you can use some of my plans. We talk about in the Investor's Toolkit, we talk about on the channel. That's just mine, right? You should take yours or take mine and make it your own, but you do need to have a plan. When you don't have a plan, that's when you get kind of out of whack and you feel a lot of the emotions that you do. So again, relax. This is that time of year where this just happens. This is relatively common. I want to give you just a little bit of data real quick that I mentioned in the previous video, but also mentioned on public, but in case you didn't see it, just give you this real quick. All right, so there's a study, this is in CNBC, they published this in May, when I first mentioned this, 2021. So um, investment firms studied seasonal trends, as we, seasons, right? They found that 27.8% performance, that's the strongest part of performance, happened between November 1st and April 30th. And that was the fourth strongest in the last 6 months. So this is, I guess, from the previous year, going all the way back to 1896. So when you take all that and go all the way back to 1896, not for the best year, or last year rather, 2020, when we just take out the entire average for the Dow, not the S&P 500, just the Dow, which is 30 companies compared to 500. The average return was 5.2% between November and April, compared to October's analysis, which was just 2.1%. Okay, so average, you're going to get like 7% or so on average, not every year, just on average. But from November to April, you got 5% compared to just 2.1. Okay, so think about that. You're getting more than double during that November and April period than you do from May to October. Okay, and that's just on average, and it's just the Dow. So you could get a lot more. These are just averages, and then some of the best years, you're talking 27% during that latter half versus like the first half of the year, depending on how you want to divide those months up. So again, this is relatively common. There's an old adage that says "sell in May and go away," where like, hey, look, it's May. We know it's not going to be good. We're just going to leave, right? Which is not actually the best strategy, because again, you can kind of pick up things on the low and it swings up and it starts all over and you kind of continue. You can combine this, if you will, with the other stock market pieces that we know of when we say that every 3 weeks on average, you hit a new all-time high. Well, if I'm going to hit an all-time high, there's got to be a low somewhere in between there, right? And you can still do that, right? I'm not saying it's going to be an all-time high in the next 3 weeks. Again, that's just an average, but it wouldn't shock me if at some point in September, or really between now and the end of the year, you're going to see a new headline that says, oh, look, there's a new all-time high. You could be benefiting right now if you're choosing quality companies, if you have index funds or something like that. So just wanted to just relax and get you centered over the next few days. I want to take a lot of your questions. So if you have any questions on YouTube, public, Instagram, those are my primary places. Feel free to put those in the comments and I'll take those and make videos on them. I got a bunch earlier today on public, so you'll start to get back to that Q&A thing that I enjoy doing. So any questions that you have, please let me know. Any companies or ETFs that you want me to discuss, feel free to add that in the comments and we'll talk about it. All right, talk to you guys later. Bye.